Welcome all to GEPL Capital's another market outlook video. I'm Sanket Bendre from the Fundamental Research team, and in this video, we will be discussing a few key updates that happened in this week. Furthermore, we will also be looking at the sector valuations as well as FIIs and DIIs inflows and outflows over the last few months. So let me share my screen and we will start the video soon. So I hope my screen is visible now. Okay, for this slide, as you can see that okay, so as we can see in this slide, we have mentioned a few key updates that happened in this week. So the first update will be that India and US has recently restarted their trade talks, and Brendan Lynch, who is the assistant US trade representative for South and Central Asia, is visiting India. So we are seeing that both the countries have started renegotiation on trade talks and discussing like how we should move further regarding this tariffs that happened over the last month. And we are seeing some positive sentiments in the market, given India's chief economic advisor, Mr. V. Anantha Nageswaran, has expressed optimism that the penal tariff imposed on certain imports will be withdrawn after November 30. So as we know that India had been imposed by a penalty tariff of 25%, additional 25%, given we are purchasing Russian oil. So we should see that remove over the next few days. The next key update will be a stock specific update. So this will be Infosys, as Infosys has announced a major 18,000 crore of share buyback, and this buyback is priced at 1,800 rupees, which is currently over 20% premium from the current market price. So we are seeing this buyback after 3 years. This will be the first buyback after 3 years by Infosys, and we should see some purchase in this as well. The next update will be from the US Fed, as US Fed in its recent meet that happened on the September 17th has cut down the interest rate by 25 basis points and kept the interest rate to 4 to 4.25% on the back of weaker labor markets data. So furthermore, we are seeing that Fed has also mentioned that they are planning to do a rate cut down of 50 basis points in this calendar year itself. The next key update will be that in SEBI, SEBI in its final order has mentioned that allegation from the Hindenburg case could not be established. As a result of that, SEBI has imposed no penalty and cleared Adani Group companies, including Adani Port and Special Economic Zone, Adani Power Limited, and Adani Enterprises. So no violations regarding the related party transactions were found by SEBI, and as a result of that, we are seeing SEBI has given a clean sheet to Adani Group companies. Furthermore, the recent update will be the H-1B executive order. So Mr. Trump has finally signed an order that no H-1B visa holders may enter the United States beginning Sunday, that is September 21st, unless they pay a amount of $100,000 to enter. So visa fee, new H-1B and H-1B extensions must pay $100,000 per year from now onwards, and year after that to maintain them. So this will be effectively happen from Sunday, that is 21st September, and no one, even the highest paid at 500,000, will be paying an extra 100,000 a year to the government. So this is the key. This will be a negative impact on companies that are especially in the IT sector, as most of the Indian citizens are working there and they are receiving H-1B visas, given they are getting orders. I would say job offers from the United States, and people working with even with a higher salary could face some trouble regarding this agreement. So this will be a key news that will impact the Indian markets on Monday and next week. So we should see IT companies, especially IT companies, given this H-1B visa order. So on the next slide, we are discussing sector-wise valuations. So if we see that FMCG, IT, automobile, oil and gas, they are currently at an higher ROE compared to their average ROE. And we can see furthermore, FMCG and IT companies are trading at a discount to their previous valuations. Furthermore, if we see that construction materials as well as metal and mining, consumer durables are working at a discounted valuations compared to the historical averages. Whereas telecom and healthcare are at a premium valuation compared to the historical averages. Okay, so in this slide, we can see the FIIs and DIIs inflows and outflows. So if you see that FIIs majorly did an outflow of 319 billion in rupees in the month of July, which increased to 390 billion in rupees in the month of August. Similarly, to balance out this negative impact, DIIs has increased their inflows and pumped approximately 609 billion INR in the July month and 948 billion rupees in the month of August. So as a result of that, we are seeing this inflows and outflows of DIs. Furthermore, just an update on the September month update data. So we see that FPIs had pumped approximately $905 million in sovereign debt fund in the first half of September. Similarly, automobile and auto components saw an inflow of 216 million. Capital goods sector saw 172 million of inflows. On the contra side, if we see outflows in the consumer services stocks, which is seeing an outflow of 368 million. Similarly, services sector is seeing an outflow of 361 millions, whereas realty sector is seeing an outflow of $37 million. So if you see that this data is still the first half of September, and we are seeing a positive sentiment in the automobile and auto components sector as well as capital goods segment. So I guess that's this is the final slide, and that's all from my side. So if anyone has any questions, they may do post in our comment section below, and do share, like, and subscribe our GEPL Capital's YouTube channel. Thank you.